Rob, a bit of a damp squib on the markets today. Are you a bit surprised that we didn't have more of a positive reaction to Abu Dhabi's bailout of Dubai yesterday, and of course that news last night of the Exxon Mobil deal in the United States?
Well, I think the market reacted initially yesterday, and the markets are relatively firm around the world on Dubai's story. I think that the market did expect Dubai to come in and help, Abu Dhabi to come in and help and Dubai. Then they weren't going to ever let one of the United Arab Emirates countries fail. So I think it was priced into the market that Dubai Abu Dhabi at some point would come in and support them. So I think it was priced into the market. What it did do was it just stabilized the market, and we can see today up yesterday and just relatively flat today. So no big moves on the downside.
Rob, are we starting to see volumes thin down as we head towards the end of the year and of course the public holiday tomorrow?
Yes, I think so. People are taking profit and a little bit of money off the table. We've got futures closeout tomorrow, and a lot of the action in the market yesterday was related to futures closeout and rolls going from the December into the March contract. 2.5 billion traded on the futures side and 8 billion in equity. So 8 billion on the equity side wasn't too big compared to 2.5 billion on the derivatives side. So I think a lot of the price action that we've seen is now related to derivatives and not too much on the equity side. Asset managers already moving on to holiday and taking their profits for the year already.
Of course, we have seen that although our market is flat at the moment, it opened a bit higher, went into the red. Resources still trading higher, but the financials are coming a bit under pressure this afternoon. Does this give you any indication of how investors are positioning themselves ahead of the year end?
Well, I think one of the reasons is the Fed is meeting on interest rates. And I think we can see the dollar weakening slightly, and as the dollar weakens, so the commodities prices are starting to pick up a little bit again, at least on the base metal side. So I think people are coming back into resources. They're waiting for that Fed meeting. Again, we think that they're going to once again say that interest rates are going to stay between 0 and 2.5%. And the reason there is that unemployment really still 10% in the States, and they can't really put up interest rates just yet.
Well, Rob, you said resources doing quite nicely. Of course, we saw platinum counters doing very well over the past couple of the days. And the oil price, though, very depressed, just above the $70 a barrel level. And it doesn't seem to be much upside at this stage for the oil price.
No, I think 9 days consecutively down. I think it's the most days it's moved down in many years. Inventories are coming out later in the week in the States, and if inventories in the States have actually moved up, I think we'll break that $70 a barrel and move back into the 69 level. I think people are just seeing a subdued recovery in the United States. Again, unemployment being a real push there. It's hard to see the economy recovering, not just in the short term, but in the long term when there's so much unemployment. So I think people are looking at an unemployment figure, and then we'll have to take a look at inventories. If those inventories have come down and are very thin, then we'll see a bounce in the oil price, and that will be coming out later this week.
Oil price also a bit under pressure. It's now over $100 down from the peak that it's hit about a week and a half ago. I mean, do you see gold continuing to trade around these levels, or do you think we could retrace back up to that peak?
I think as financial markets settle, and I think there's no big worries about Dubai anymore, there'll be a little waning of gold. I think it'll just be the general jewelry demand, etc. So I think $1,100 to $1,200 will be the range. It'll be difficult to see it breaking below 1,000, and I can't see it really going above 1250 from its recent highs. So I think we're in a tight range for gold, and the more stability we get in the markets on the financial level, so that gold price will wane, and any more uncertainty, any more big debt problems coming out next year will push that gold price back up again. So you just have to wait for the news stories to hit to see where you stand in. I think fairly priced right now.
Of course, we're not getting much corporate news at the moment. We did have some economic data a little bit earlier this morning. CPI for November, 5.8%, so continuing within that target range of the Reserve Bank. And of course, we also had those unemployment numbers with a 1% fall in the third quarter in jobs.
Yes, I think the CPI came in slightly better than expected. I think everyone was expecting 5.9 in consensus on Reuters, but it came in at 5.8%. A good number. It does allow the Reserve Bank, maybe if they have to decrease interest rates if they must. And I think so it does allow them to decrease interest rates if they have to. On the other side, I think that the economy is still battling. You see unemployment high. We're now at 24.5% of unemployment, a very high level there, and we need to stimulate the economy. And I think it does give them a little bit of leeway to reduce that interest rate again if they have to.
And of course, we saw that retail sales data out last week with 6.5% down in October compared to last year. And of course, with people losing their jobs, they're just not spending ahead of Christmas, are they?
No, it doesn't look like it. We've seen a little bit of a tick up on the credit on the credit numbers, but you can't tell if that's from people wanting to spend or people paying off even more debt. So it's a bit difficult to tell. But the retail figures are not positive, and people seem to be really holding back to the last to spend on their Christmas and holiday gifts. So the consumer really under pressure, and until we get a real improvement in unemployment, we're going to see that consumer spending around the world be under a lot of pressure.
Mm-hmm. Rob, what would you expect in equities in the run-up to Christmas?
I think it'll be relatively thin and quite choppy. I don't think there'll be any huge sell-offs unless there's something around the world that pushes it, another big debt story like Dubai. I think we'll probably just stay flat around these levels. We've got closeout on Thursday, and it might be quite choppy around closeout, but I think we'll already stay at these levels into the end of the year.